Ladies and gentlemen, Geeky, you are welcome to the daily update. Hope you guys had a good day trading. Today, market is down about 0.14%. There on the S&P at 0.7% positive. Semiconductor flat, Dow 0.2. Russell 2000 transfer banks, buy energy, biotech, healthcare, home builders, utilities, retail, emerging market, every single sectors are seemingly red today. Bitcoin and gold, silver miners are up quite a bit. Dollar down, oil down, treasury bond up. The rates are down, VIX about 7% positive there. Let's stick with S&P 500 ETF. Spider! 65-minute chart here. So this is what we closed on Friday. It looks like we actually saw a down gap this morning right here. You can see this is where we closed on Friday. This is where we open here, and this was an important level which we talked about on the last week's analysis, because this was the level that the market is just barely hanging here, especially for the bulls here. This is a level last known rising uptrend support level. I mean, we got quite a bit of other horizontal supports here. You can see at 384, 378, 374, we have a horizontal support. But as far as a rising uptrend support is concerned, it looks like this might be the last one there is ever since we bottom here back in October that we can connect. So you can see this is where we found support there, and then November, and that was the level. So it was pretty dramatic when we saw a down gap this morning. Looks to be the down gap, possibly some sort of exhaustion gap, obviously with the very, very aggressive abrupt sell-off that we've witnessed last week. With that down gap, it would have been much worse for the buyers if that down gap would have been opened and if bears would have came down and filled the entirety of this thing. But bulls just doing their best to just trying to stay afloat here, trying to stay above the this rising support there. So we got up here, as you can see, for the several hours or so. However, you can see the when it came down to it on that third hour, fourth hour, fifth hour. As you can see here on that third hour, there's a micro-term moving average coming down here. So you can see bulls made a run for it on the third hour, not able to get above that micro-term. Came down, got right back up. Fifth hour, same thing. The micro-term. Sixth hour, it looks like it kind of gave out, not able to continue to push here. So ever since the micro-term was lost, you know, last week here, as you can see, this is the first time retesting that micro-term as we've been falling down quite rapidly, and that micro-term is acting as resistance. There's so many resistances that bears have acquired in the last week and a half or so. Things are looking very, very hectic here for the buyers. 388 is a current today's resistance. As you can see, that's the resistance. Bulls are not able to get up, but that's a prior support acting as new resistance. We got the micro-term support, micro-term moving average acting as resistance. We got the short-term guarding that 392 horizontal resistance. We got all these moving averages for falling. The sentiment is obviously bearish here. So there's a whole lot that needs to happen. Obviously, one day pop, one day consolidation, one day anything cannot start a trend. So it's going to need a whole lot more than just a little bit of move here. Let's check out that oscillator. So very interesting to note that we have the bullish divergence formation occurring here. You see that neckline right here? That's the neckline. That's what is known as a neckline, an oscillator neckline, right? So you can see these lows. That's a higher low. So we actually have a bullish divergence on the oscillator while the price remain very weak here. So you can see even that oscillator actually still favoring the buyers.
Perfect.
Not only favor the buyers on Friday, they favor the buyers today. And all throughout today, this thing never crossed down in the last couple of days, while the price has pretty much plummeted down. What we witnessed in October is that we're dealing with this important pivot as well. And you can see we actually gapped down here, right? You see there was, if I come here, this is where it closed the day before. This is where it opened. We saw significant down gap, and then we made a move and then fell back down. In that process, as you can see on that oscillator right here, we actually formed a bullish divergence here. That's interesting. It just, that sequence was a very, very interesting, because that rising uptrend support, very important support for the bulls. We gapped it down, which is best that bears can do. Bulls just barely hanging on the thread right here. Just trying to survive. You're just trying to grab onto anything and just trying to stay above that. And on top of that, with that bullish divergence in the picture, if there is any kind of abrupt bullish move going into tomorrow, that's going to really make this oscillator to fully advance, and bulls can at least get up to 392 and then retest that midterm at 392 right here. Obviously, bears do not want to hear any of that right now, and that oscillator needs to kind of power back down and nullify. But going into tomorrow, things can change depending on how the price moves in the first couple hours. The oscillator is favoring the buyers going into tomorrow. I'm coming back for you. We'll reassess the situation. Injury evening. Go trading tomorrow.